Hi guys, this video will discuss about the characteristic and role of small and medium enterprise SMEs in Malaysia context, as well as 3 reasons that lead to the difficulty and obstacle faced by SMEs in securing bank credit. But before we begin, I'm curious, what are SMEs? According to the Inland Revenue Board of Malaysia (IRPM), SME is an acronym for Small Medium Enterprises, while it is also interpreted as small and mid-sized business in Malay language. SMEs can be categorized into industries which are manufacturing and services. Examples of the manufacturing industry are spare part factories or production of physical goods. Meanwhile, the example for the service industry and other sectors are business which are other than the manufacturing industries. It consists of a wide range from legal firms, tourism-related business, and others. Now, we will discuss the characteristics of small and medium enterprise SMEs. First and foremost, size and structure. Malaysian SMEs were also classified into 3 group sizes, which are micro, small, and medium. Micro enterprise are those business with an annual sales turnover less than 300,000 ringgit or have less than 5 full-time employees. This applies to both of manufacturing industry and service and other industry. For small enterprise, the characteristics are slightly different between industries. In manufacturing industry, small enterprise have a range of sales turnover between 300,000 ringgit to less than 50 million ringgit, or have a full-time employee between 5 to less than 75%. In service and other industries, small enterprise have a sales turnover between 300,000 ringgit to less than 3 million ringgit, or have between 5 to less than 30 full-time employees. As for the medium enterprise, those in the manufacturing industry have between 50 million ringgit to 50 million in sales, or 75 to 200 full-time employees. Meanwhile, in the service and other sector industry, medium enterprise have a sales turnover from 3 million ringgit to not more than 20 million ringgit, or employ 30 to not more than 75 employees. Second characteristic of SMEs is flexibility and adaptability. One of the key characteristics of SMEs in Malaysia is their high level of flexibility and adaptability. SMEs in Malaysia are not connected to big or high-status companies, which means they have more freedom in managing their operation and making decisions. This independence allows them to be more flexible and to adapt quickly when there are changes in customer needs or market trends or economic challenges. For example, they can easily adjust their product, services, or business strategy to suit new demands. Unlike large companies that often take longer to adjust due to complex structure, SMEs can easily change their strategy or operation when needed due to their flexibility and adaptability in the market. This gives them an advantage in staying competitive, especially during uncertain times like the COVID-19 pandemic, where many SMEs manage to survive by shifting to digital platform or exploring new business models easily.
Last but not least, small and medium enterprise in Malaysia usually operate with limited resources. These include limited capital, limited skilled workers, and limited access to technology. Most SME rely on internal funding such as personal saving or loans from family and friends because it's more flexible and based on trust instead of going through formal bank loans, which usually come with more rules and conditions. In addition, many SME only have a small number of employees and often lack technical staff or professional manager, which make it difficult for them to adopt new technology or improve their productivity. For SME in regional areas, their situation is even more challenging. They face challenges like limited infrastructure, difficulty in hiring skilled workers, and higher operating costs. Because of all these challenges, SME tend to focus more on surviving day-to-day rather than planning for long-term development. In Malaysia, small and medium enterprises are often described as the backbone of the country's economy, even though they are small or medium in size. One of the key roles of SME is contribution to the gross domestic product, or known as GDP. According to the Department of Statistics Malaysia, SME contribute 38.4% to Malaysia GDP in 2023. That is a big number, and it clearly shows how important SME are in driving the country's economic activities. SME play a critical role across various sectors such as manufacturing, services, construction, and agriculture. Their strong presence in local market helps to boost domestic demand and support steady economic growth from the ground up. In short, SME are not just small business, they are an essential pillar of national economic structure.
Moreover, SMEs also help in employment generation. SMEs are also a key engine for job creation in Malaysia. In 2023, over 7.86 million Malaysians were employed by SMEs, representing 48.5% of the country's total employment based on data from Department of Statistics Malaysia (DOSM). This highlights the crucial role SMEs play in reducing unemployment and providing livelihoods, especially in rural and semi-urban areas where large companies may not operate. By offering accessible job opportunities, SMEs help to promote inclusive economic development and uplift local communities. SMEs help uplift the standard of living in underdeveloped regions, support household income generation, and encourage local entrepreneurship. For example, small agro-based enterprises not only process and market agricultural products locally, but also enable farmers and rural youth to participate in value-added activities. Furthermore, SMEs also help in driving exports. While the majority of SMEs in Malaysia primarily focus on serving the domestic market, an increasing number are actively exploring and expanding into the export sector. This shift is particularly noticeable in industries such as halal products, processed food and beverages, textiles, furniture and cosmetic products, where Malaysian SMEs have developed niche expertise and strong product quality. These sectors are increasingly in demand in regional and global markets, especially among Muslim-majority countries and Asian trade partners. However, entering the international market can be challenging for small businesses due to limited resources, lack of knowledge about export procedures, and global competition. To address these challenges, the Malaysian government, through agencies such as Malaysia External Trade Development Corporation (MATRADE), SME Bank, and Malaysian Investment Development Authority (MIDA), provides comprehensive support systems like export training programs to help SMEs become export-ready and competitive abroad.
Next, 3 reasons that lead to the difficulties and obstacles faced by SMEs in securing bank credit. First and foremost, lack of collateral. Many SMEs, especially startups, micro-enterprises, and small family-owned businesses often do not possess substantial physical or financial assets such as land, buildings, or machinery that can be pledged as collateral. Banks use collateral as a form of security to reduce the risk of financial loss in the event that the borrower defaults on repayments. Without collateral, SMEs are seen as high-risk borrowers and banks are less willing to approve their loan applications. Even when loans are approved, they often come with higher interest rates or more restrictive terms, making borrowing more expensive for SMEs. A new technology startup operating from a rented office may have promising business potential but lacks property, equipment, or other high-value assets to offer as collateral. As a result, traditional banks may decline the loan application, forcing the business to seek alternative, often more expensive financing. Secondly, insufficient credit history and financial track record. Banks heavily rely on financial data such as audited accounts, cash flow statements, and historical credit performance to assess whether a business is capable of repaying loans. SMEs, particularly startups or young companies, often have limited or no formal financial records, especially if they operate informally. They lack an established credit history, making it difficult for banks to evaluate their financial stability. Without verified financial information, SMEs fall short of banks' lending requirements. Even SMEs with steady operations may face rejection if they cannot demonstrate consistent profitability, proper bookkeeping, or historical loan repayment patterns. For example, a A small retail business that has only been operating for 1 year may not yet have audited financial statements or a reliable credit score, causing banks to hesitate in providing finance. Last but not least, perceived high risk and asymmetric information. SMEs are often perceived as high risk borrowers because their businesses are more susceptible to market volatility, economic downturns, or unexpected operational challenges. Many SMEs lack sophisticated management structures or contingency plans, which increases uncertainty. This refers to the situations where business owners have more knowledge about their company's true financial health, potential, or challenges than external lenders. Banks, having limited access to such information, are unable to accurately assess the risk, leading to higher interest rates to compensate for the perceived risk and stricter terms such as lower loan amounts or additional documentation requirements. In many cases, there is outright rejection of loan applications. For example, an SME in the agriculture sector may know that their next harvest is expected to generate strong revenue, but due to a lack of formal documentation or transparent reporting, banks remain skeptical about lending.
In conclusion, while small and medium enterprises play a vital role in Malaysian economy, they still face a number of structural barriers that make it hard for them to secure bank credit. These include the lack of collateral, insufficient financial record, and something we call information asymmetry, meaning that there is a gap between what SME know and what lenders can actually see about their business. To deal with this, many SME turn to government initiatives such as SME Bank Malaysia and Tekun Nasional. Some also explore alternative financing options like peer-to-peer lending or even venture capital.
That's all from us. Thank you.